Donald Trump, he is godlike. He's been put on earth to be our Jesus Christ. So they think he has a Midas touch. A lot of people would argue, actually, he's got the reverse Midas touch. What is gold, he turns to dust.
The U.S. provides the dollar and Treasury securities, reserve assets which make possible the global trading and financial system, which has supported the great era of prosperity. Our military and financial dominance cannot be taken for granted, and the Trump administration is determined to preserve them.
Welcome to GBS Deep Dive. I'm Najma Minhas. So the last 2 weeks have seen US assets hit on all fronts, from the stock market drops, bond market blowing up, and while less attention has been given to the dollar index, it has fallen 8% year to date. It fell below the key 100 level for the first time since July 2023. Now, the dollar index is the value of the US dollar against a basket of the major global currencies. So all of these events, what do they show? They show that foreign investors are responding to Trump's protectionist policies by dumping US assets in general. This is putting a downward pressure on the dollar as well. And this is being called the sell dollar trade, or de-Americanization across all asset trades. Such a synchronized downturn across all major asset classes is very rare. Even during the COVID-19 crash in March 2020, US Treasuries and the dollar served as safe havens that investors across the globe flocked to because of the uncertainty. Instead of Treasuries, investors are now flocking to other safe havens like the Japanese currency, the yen, the Swiss franc, and of course the historical safe asset, gold. The dollar has dropped in value against the Swiss franc by over 8%. The last time a major economy experienced simultaneous declines in stocks, bonds, and the currency, much like what the United States has just experienced, was the United Kingdom in late September to October 2022, during what became known as the Truss budget crisis. And the crisis would result only after the Prime Minister, Liz Truss, reversed the budget. Her finance minister had to resign, and Truss herself stepped down 6 weeks after being elected as the party leader of the Conservative Party. Earlier in the 1990s, Japan saw what is called a triple Yasu loss. It was a fall in the stock market, a rise in Japanese bond yields, and a declining currency. The pause in the tariff hikes for 90 days has brought a short-term respite to the market, but there's serious uncertainty in these markets as everyone is treading on eggshells. The yields on the 10-year Treasury bonds are still trading around 4.5%, up from 4.2%, which is where they were on Liberation Day, April the 2nd. I'm surprised Liberation Day was not on April the 1st, because at least we'd all be able to say it was April Fool's Day. Anyway, it is now America that must stomach this noxious combination. This flight from US assets has global consequences. Nearly every country around the world holds treasuries and dollars as the backbone of their own reserve systems, which are held in the central banks in those countries. They underlie the core architecture of the global financial system, which has been built around trust in US markets. When Japan faced the triple Yasu, it marked a turning point. When Britain faced it in 2022, it toppled a government. And now it's America's turn. And it's not just a market signal. It's a referendum across the world on US credibility. Despite what Donald Trump thinks, dollar dominance is not a given forever. He would do well to remember the adage, you don't know what you've got till it's gone. What is the US's exorbitant privilege? How is China ensuring it's not economically in the same position that Russia was in 2022? And why does the Trump administration think the world should pay the United States for holding the dollar? Please like and share the video if you enjoyed and subscribe to the channel. Your engagement will help the channel to grow. Donald Trump's chaotic so-called America First policies have got investors spooked. President Trump may believe that the United States dollar is always going to be the currency of choice. By contrast, not all analysts agree with him. The head of foreign exchange research at Deutsche Bank said, and I quote him, the damage has been done. The market is reassessing the structural attractiveness of the dollar as the world's global reserve currency and is undergoing a process of rapid de-dollarization. This is the head of FX research at Deutsche Bank. Figures compiled by the IMF show that the United States dollar is the reserve currency of choice for countries around the world, accounting for almost 60% of global foreign exchange reserves. This has declined from 70% in the year 2000. And in fact, if you adjust for the exchange rate and interest rates, it's now closer to 55% of all FX reserves across the world. The euro comes a distant second at about 20%, followed by the Japanese yen at almost 6%. And the pound sterling, which was the global reserve currency before the United States' rise to dominance after the Second World War, accounts now only for about 5%. A side note on this is that during this period, the United Kingdom ran a deficit on merchandise trade before the First World War, so a situation not so dissimilar to the United States right now. However, net income that the UK used to get from other sources such as shipping, insurance, interest rates, and dividends was more than sufficient to produce a substantial current account surplus, something that the US is not really focusing on right now. Countries like China, Russia, Brazil, and even some Gulf nations have been pushing for non-dollar trade settlements. However, dollar denomination is key to the US military and economic power, and Donald Trump has on several occasions threatened BRICS countries with 100% tariffs if they try to replace the dollar with any other currency, including any BRICS-related currency.
Of them, and they were trying to destroy our dollar. They were going to say, they wanted to create a new currency. They probably wanted to use the yuan. China said, is any BRIC state that even mentions the destruction of the dollar will be charged a 150% tariff. I think that's breaking up rapidly. We said that if they're going to go and do anything to undermine the dollar, that includes China. I don't even know that they're a member of BRICS, but we're going to put a 100% tariff on every one of those nations. And at the mere thought of saying that, I think that's all broken up. That idea is no longer.
The United States runs a budget deficit. In 2024, this was around $1.8 trillion. And the last time the United States had a budget surplus was in the year 2001. Its national debt has now climbed to nearly $36 trillion, and it pays over $1 trillion just in interest. Now, this is why when the yields jumped, that the administration reacted like it had some kind of seasickness, and they threw out the anchor in desperation, delaying that 90-day pause on tariffs. The Japanese, followed by the Chinese, are the biggest holders of US debt, with the Japanese holding around $1.03 trillion, and the Chinese, who have significantly reduced it over the years, at the end of 2024 were holding around $770 billion in debt. And this has come down from $1.3 trillion in 2013, when the Chinese were actually the largest holders of US debt at the time. Now, the privilege of having the world's reserve and preeminent currency is known as its exorbitant privilege, as coined in the 1960s by Valéry Giscard d'Estaing, then France's finance minister and later its president. He used it to criticize how the United States could live beyond its means without the same consequences that other nations would face. These privileges include being able to issue debt in its own currency, being able to borrow at low rates, or at least having the autonomy to set those interest rates. Key commodities like oil, gas, wheat, gold, etc. are all priced in dollars. All of this reinforces the dollar's dominance and gives the United States an outsized influence over global trade. It also gets to essentially print dollars to buy foreign goods and services, while all other countries must earn dollars first. But while United States markets unravel and Washington clings to these tariff threats or potential tariff threats and the dollar dominates, Beijing isn't watching passively. It's preparing. Over the past few years, to ensure its economic independence, China has laid the groundwork for a post-dollar world. It started to settle oil trades with the Saudis in Yuan. It's offered Belt and Road Initiative countries loans in local currencies. And it's launched SIPS, its own version of the SWIFT system, to bypass the United States financial controls. As the reserve currency, the United States can impose effective financial sanctions on other countries by cutting off their access to the dollar-based financial system. And that is why SIPS is very important. This has been a major tool in the United States foreign policy, especially in dealing with adversaries like Iran and Russia.
Economic sanctions have become one of Washington's favorite foreign policy tools, only more so over the last 2 years as the U.S. has targeted Russia for invading Ukraine. Sanctions are seen as a light footprint, low-cost way to strike at adversaries. But do they work?
Public Policy Research Institute says U.S. sanctions on Iran are arguably the most extensive and comprehensive set of sanctions that Washington maintains on any country.
And after seeing what happened to Russia, no country wants to be in that position. A shift away from the dollar would weaken the United States' ability to leverage its own currency for political and economic objectives. It's one of the major reasons why Putin has critiqued the US financial policy and has been driving the move in the BRICS towards a joint currency. Countries across Asia, Africa, and Latin America are quietly hedging their bets. They're signing currency swap agreements with Beijing, and they're reducing their exposure to the dollar. Even China's digital yuan is being tested in cross-border settlements with the UAE, Thailand, and Russia, giving China a head start in the race for a new global currency architecture. Now, the truth is, China doesn't need to replace the dollar overnight. It just needs to make the dollar feel less essential. And in many parts of the world, that shift has already begun. And with each American misstep, it becomes easier for the world to imagine a financial system where trust doesn't begin and end with Washington alone. The United States is in a unique position because the rest of the world recycles its dollars back into US assets, such as US stocks, US bonds, US real estate, US private companies, and so on. So, for example, when countries like Germany or Japan, China, or Saudi Arabia export goods and services to the United States, in return, they receive US dollars. Now, since most global trade is invoiced in dollars, exporters then convert their dollar earnings into their own currencies via local banks or central banks. Those dollars then get recycled in one of three ways: buying US Treasuries, which are safe assets that earn interest, or they can invest them in US stocks, technology companies, or real estate, or any other kind of companies, US companies, or they're held as foreign reserves in central banks. Now, this system allows the United States to run a large trade and budget deficit without facing a crisis. Why? Because there is a continuous foreign demand for dollar-denominated assets. This is the demand that keeps the United States interests much lower than they would be otherwise, and the stock markets much higher or buoyant than they could potentially be otherwise. Now, in recent years, economists have warned that this exorbitant privilege, by making borrowing cheap, might be inducing the United States to take on too much debt, and thereby making the dollar financial system very fragile and vulnerable to a market run. And there's a genuine threat that it could collapse, much as the dollar's peg to the gold did in 1971, when the Bretton Woods system of fixed exchange rates blew up. Now, after World War II, the Bretton Woods system made the United States dollar the anchor of global finance. It was pegged to gold at $35 an ounce, and all the other currencies were then pegged to the dollar, which created a very stable but a United States-centric monetary order. But by the late 1960s and the early 1970s, major cracks began in the system. The United States printed dollars to finance its Vietnam War and the various other Great Society programs that they were holding at the time. They flooded the world with paper backed with very little gold. European countries and Asian countries started losing faith and started demanding gold instead of dollars, France especially. And you may say, it's always the French. And that is an interesting story in itself. Why is it always the French that tend to stand up for themselves and never the British? Anyway, United States gold reserves started dwindling. And then came August the 15th, 1971. President Nixon suspended dollar convertibility into gold, effectively ending the gold standard. And this triggered a collapse of the Bretton Woods system of 1944 onwards and ushered in an era of floating exchange rates. However, the system of petrodollars that Kissinger then helped to solidify in the 1970s after this collapse of the Bretton Woods, which tied oil sales to the US dollar, reinforced global dollar demand. Now, I did do a vlog on this earlier, and I will put a link to it below in the description if you're interested in that particular conspiracy story, which was all the rage last year. Now, today, the dollar is no longer backed by gold. It's backed by confidence in the United States assets through its treasuries, its equities, the rule of law, global dominance, and so on. But what happens if countries lose trust in the United States debt due to spiraling deficits or political dysfunction, or that the United States weaponizes the dollar system through sanctions or reserve freeze, or alternatives like China's Yuan, gold, or digital currencies gain massive traction? Then the system could just unwind, just as the Bretton Woods did. Just as the gold peg collapsed under the weight of excess money printing and the geopolitical stress in 1971. Today's dollar dominance could collapse under fiscal irresponsibility by the United States, protectionism, or a multipolar world rejecting a US-centric system any longer. Little more than a week ago, the King Dollar's reign looked very, very secure, and such a calamity seemed very remote. It's interesting, it's a measure of Donald Trump's arbitrary and capricious rule that it now even appears to be possible. In 1971, the gold anchor snapped. In 2025, the trust anchor is slipping dangerously. Both systems depended on a promise that the dollar meant stability. If the dollar becomes just another political tool, the world will eventually stop using it as a compass. According to Henry Kissinger, he who controls money can control the world. Ironically, within Trump's administration, there are many that have started to view dollar's status as the international reserve currency with distaste. And what they started saying is, this is another sign of the world freeloading off the United States. Donald Trump's economic advisor, Stephen Miran, last week argued that the dollar's reserve status, while it's beneficial in some respects, also imposes burdens on the country, and that other countries should pay for the privilege of using and holding the dollar, for example, as their reserve currency. He argued that the global demand for the dollar keeps its value artificially high and therefore makes United States exports much more expensive and less competitive, thereby harming, of course, domestic manufacturing.
On the financial side, the reserve function of the dollar has caused persistent currency distortions and contributed, along with other countries' unfair barriers to trade, to unsustainable trade deficits. These trade deficits have decimated our manufacturing sector and many working-class families in their communities to facilitate non-Americans trading with each other.
It's all your fault. You guys out there, you demand the dollars to buy the gold, the oil, the US assets, the US Treasury. It's all your fault that my dollars are expensive. Seriously, the argument is almost on the verge of being ludicrous. Another version of this particular argument goes on to say that China is also responsible for the financial crisis in 2008 because they were so busy buying all the mortgage debt of all the United States homeowners who then went out to buy homes. Ludicrous. So what does Miran propose? Well, he's saying, let's have another Mar-a-Lago Accord. Mar-a-Lago, remember, is the name of Trump's resort in Florida. So he wants an accord similar to the 1985 Plaza Accord, when the United States agreed with Japan, Britain, West Germany, and France to depreciate the dollar to support American economic interests. So their coordinated interventions in the foreign exchange markets pushed the dollar down about 50% over the next 2 years, And at the same time, it's kept the position of being the world's safest and reserve currency in everyone's foreign exchange reserves. Now, such an action is really unlikely to be possible today. In 1985, the United States was at the pinnacle, if not close to the pinnacle, of its power. There was a tight G5 alliance. The United States had a huge leverage over its allies. Germany was still in two parts. The United States security provision meant it had a huge power over that country as well. This is unlikely to be as successful now. It's never going to happen because today's world is multipolar. China is the key counterweight to the United States. The G5 no longer have the same trading power that they used to, and China has no incentive to cooperate to help weaken the dollar. BRICS nations are actively challenging dollar dominance and not defending it. Pascal Lamy, the former EU Trade Commissioner and the ex-head of the WTO, the World Trade Organization, recently remarked on the tariffs, and he pointed out that Trump's trade war could lead other countries to work much more closely together. In his words, it's an American crisis. It's not a global crisis. The United States is 13% of world imports, but there's no reason for the other 87% remaining to be contaminated by these voodoo economics. Furthermore, United States sanctions, the reserve freezes it's done, for example, Iran and on Russia, and tariff diplomacy have made countries very wary of the United States financial tools. And most importantly, markets, not governments, dominate the foreign exchange markets now. Government coordination has long gone. Today, trillions of dollars flow through private FX markets daily. Central bank interventions rarely have a long-lasting impact unless they're backed by deep policy coordination. The Plaza Accord succeeded because the United States at that time could call all the shots. The Mar-a-Lago Accord will fail because nobody's answering the call. It's a nostalgic idea rooted in a world that no longer exists. Donald Trump is 77, 78 years old. He lives in the America of the 1970s and 1980s. It's no longer those years. The administration's aggressive tariff policies and the attempts to leverage the dollar status will only further undermine global confidence in United States financial leadership and accelerate the erosion of the dollar's dominance. Share with me your thoughts on the de-Americanization trade. Is this a one-off reaction to Donald Trump's policies, or do you think a secular trend is underway that will threaten the economic US hegemony as it stood? Thank you for giving me your time today and have a great day.